All right, we are live, guys. So on Wednesday, the Federal Reserve raised interest rates for actually the sixth time this year. They raised them another 0.75%, which immediately, as you guys know, put stocks in the red Wednesday and Thursday. But the next day, today, on Friday, we actually saw a rebound in the market with Friday, November 4th. We saw the market rebound after a jobs report came out announcing an increase in unemployment. And today, joined by my friend Harris, as you can see here, and Russ. Harris is the host of the One Penny at a Time podcast. Russ, like me, also makes dividend investing content here on YouTube, and today we are going to talk about it. Fellas, thank you for joining me. How are you guys doing?
Doing great. Happy Friday. It's almost time for the weekend, and I'm ready to go.
Sober October has come to an end once again. So for the third year in a row, in the first week of November, I'm off the bandwagon. Cheers, I'm drinking a Guinness, everybody.
Hey, cheers to you, man. We'll do an official cheers in a moment. Real quick, I just want to welcome... No, you're good, man. You're good. I want to welcome all you guys to the Dividend Happy Hour. Thank you so much for tuning in for another week. We're going to have a fun time. It's going to be a really fun hour. And real quick, let me know in the live chat where in the world you guys are tuning in from. The dividend investing community is one that stretches far and wide, and it's always interesting to hear where other investors have their home base. So let us know in the live chat, or let us know in the comments below if you're watching the replay. And I think we should do a quick cheers now while they're submitting where they're from. I see Russ put his in there already. So anyway,
cheers.
Let's do a cheers.
Salute.
Guys, first of all, let's cheers to, what should we cheers to? Let's cheers to reaching financial freedom, because really that's the mission that we're all on here. And really, when you get to the root of it, that's what's bringing us here together tonight. So cheers to financial freedom, number one. But number two, cheers to all you guys out there. Harris and Russ, thank you guys for joining me tonight. I'm stoked to have you guys on, as always. And cheers to all of you guys in the live chat. And
Salute.
Those watching the replay, thank you all for listening to our gibberish over this next hour.
Salud.
Hey fellas, what are you guys drinking tonight?
I am doing a vodka cranberry. He's keeping it simple and classic today.
I think I already said my Guinness, but it's in an etched,
Oh,
it's a
yeah.
special etched glass. Can't see it. Maybe when I finish it, you'll see it. But yeah, love the Guinness.
Nice, man. Let's see who we got in the live chat. We've got Kevin, who cracked open his St. Pauli girl. We've got, I don't know if I'll pronounce this right. I apologize. Jair? Cheers, drinking Track 7. Track 7, left eye, right eye. Is Track 7, I think Track 7's actually a local Sacramento brewery. I'm not even joking.
I've never heard.
That's from,
I haven't heard of it either.
I think that's from Sacramento. So that's very cool.
I'm going to have to try it.
Yeah, so Paolo drinking a margarita. That's what I got here too, a little marg. Who else we got here? We got Bill's drinking a Diet Coke, classic. Charles drinking a Vanilla Crown. And we've got Caleb here with a fresh H2O. So, nice. But guys, what do you say we get into the live chat? What do you guys think about the recent interest rate hikes?
You want me to take it off? Well, I'm going to take it off. I could take off.
Go for it, Russ.
Hey, I'm just in. I know I'm a little crazy, and it's the weekend here, but
I didn't know we were doing shirts versus skins tonight, Russ.
Dude, hey, I talked about having dividend diamond hands on my last podcast, so that might have to be a new tattoo, baby. Let's go. Man. I'll just I got a few notes. So the jobs were higher than expected, 261,000, but it was still down, right? So it was 315,000 in September, 292,000 in August, and that brought our unemployment rate up to 3.7%. And the market liked it because what the Fed is looking for, and I listened to the whole J. Powell presser, and so the Fed looks at all this data, which is lagging, and they want to see the market starting to weaken. They want to see that labor market starting to weaken. And the market thinks that a pivot could be coming. So with the labor market weakening and unemployment going up, I think everybody's expecting a pivot, but we'll see. We'll see what happens with that. So that's kind of why the market did a little bit of the old poppy pop today.
Yeah. Harris, have you heard the same thing about a pivot maybe being on the way, or have you heard something different?
Right now, obviously, I mean, I don't think anybody on this stream tonight was surprised about what the percentage was or the hike or anything like that. I think we all just kind of knew it. Just bring it to us, give it to us right in the face. Um, I was expecting maybe it won't be for this one, maybe for whenever they do the next big meeting. I thought jobs was actually going to be in the negative because if you've been seeing right now, a lot of the major companies have been like Intel is starting to, they think they did like a 20% reduction in staff. Obviously, Twitter with all the Elon stuff, that's been a big thing. A lot of companies right now, even I think Wells Fargo and their mortgage division have started doing some cutbacks. So it's being talked about more. So maybe it's like you said, it's lagging and that's going to hit into there. So I'm curious to see what happens with that. I think right now, I think there's still room to go for it, to be honest.
You think there's room to continue increasing the interest rates?
I still don't think that it's under control, and obviously, and it's crazy. I was listening to a podcast this morning. I usually listen to, it's like the daily news where it's like a quick 5-minute snippet, and they're saying that they're still expecting holiday shopping is still going up, even with everything going on, where we're supposed to be, there's supposed to be in a recession and all this stuff, and the holiday shopping is still going up. So it's really interesting to see where it's going to go.
Dude, J-Pow said that spending, in a nutshell, J-Pow said, y'all saving too much money and you're all spending too much money. We like things that are hot and tight, but the labor market shouldn't be hot and tight right now. That's not what they want to see. Yeah. So, you know what? Interest rates, it's crazy. When you look back to the 70s, in January of 77, it was around like 4.6%. So kind of close to where it's at now. By December of 1980, so a little, almost 4 years, dude, it was at almost 20% was the interest rate. I mean, that was Paul Volcker, just trying to break the economy, which everyone hated him for it then. But it was the right thing to do. And it's just like Jay Powell said, man, he's like, we have very powerful tools. And the only thing they can really control is that demand destruction. They're not going to be able to control the amount of spending that the government does, but they sure can try to break the demand side. And the demand destruction, I think, is what they're doing. So it's going to be interesting to see. I know they said the terminal rate was 5%, but now he's saying we've got some work left to do. So I don't know. Nobody knows where this thing's going to go. And unfortunately, the Fed is usually very, very reactionary and late to the party. So, yeah, that's the fancy way of saying I have no idea what's going to happen, and neither does Mr. Powell, man.
I mean, at least for the next month, I would imagine we'll it's either going to be like a 0.5 interest rate hike or a 0.75 again. Definitely some sort of hike coming in December. But I will say it doesn't seem like he's too keen on slowing down at this point. I mean, one quote from the meeting on Wednesday, he said, and actually taking a step back real quick, I think he's looking more. He would rather, do too much tightening than not enough. He says if we were to over tighten, we could then use our tools strongly to support the economy. These tools, guys, if they over tighten and interest rates get too high and inflation comes, if things really get out of whack from doing too much tightening, they have certain instruments, like they can just lower interest rates immediately and also print more money. These are the tools he's talking about. But he said, we can use our tools strongly to support the economy. Whereas if we don't get inflation under control, now we're in a situation where inflation is now entrenched and the unemployment costs in particular will be much higher potentially. So from what it seems like he's willing to put us through those troubled waters because it's a lesser evil than having than having inflation get so far gone that we can't contain it any longer. Do you know what I mean?
Yeah. And kind of going off of that, I think that, he's obviously very aggressive with everything. And I wouldn't be surprised if they went for another 0.75 next month, to be honest. They're just being very aggressive with the increase. And I'm just going to put it this way. This year I became a homeowner for the first time. When I locked in my rate January 1st, we literally closed on the first of the year, 3.3% for a mortgage. It's more than doubled that right now. So we're very fortunate here, but it's crazy how the funds of say if you're building a new home, which is what I did, and you have this budget already set aside for a month and a half, a year and a half, and there's so many delays because everything's on back order, and that causes the price of lumber, the price of everything to go up, and then they start changing prices in the house. The money you had separated for this is not even, you can't even do anything with it. You need to get more money out. So it's, I don't know. I mean, and it's obviously maybe going to tie in the next year for housing correction, which I know it has been happening now, but maybe next year could be a bigger fall with everything going on with the rates and plus the cost of everything.
Well, housing's
Yeah,
coming
I
down,
mean,
right? We're seeing housing coming down. So it's,
It has been.
yeah, because the demand's coming down, right? Because there's not, I read something, I'm totally paraphrasing, but basically the number of people who were applying for mortgages was way down year over year, which obviously is due to higher interest rates. Definitely, people are not as excited to lock in those higher rates compared to last year.
No, 100%.
But then at the same time, home builders are not building as many homes. There's definitely less contracts to build new single family homes than before. So the demand's decreasing, but at the same time, the supply is not necessarily increasing. So it's really a weird position, I think.
No, it is. And obviously in a mortgage, 1%, 0.5% to 1% on an increase for what the rate is, it's a big deal on your monthly payment. Yeah. So even the 0.5% raise, it's a really big difference for what you're expecting to budget.
Dude, we locked in a 2.25% on a 15-year fixed. And of course I started getting aggressive trying to pay that down. And it's funny. I don't know. I'd love to know you guys that are watching in the comments. What are your opinions for those of you that own and have a mortgage versus what's your opinion on the eternal debate of paying off that mortgage early or investing? Because I keep flip-flopping back and forth. Right now, we are 5 months ahead on our mortgage payments. So I don't have to make a payment for 5 months if I didn't want to. But it's crazy, right? Because we know that when we put that money into the house, we're locking that in. It's being tied up in the house. We can't get it out unless we want to do a HELOC. It's not real easy. It's not liquid anymore. But when we invest it, at least we have that. We have more options when we invest it than locking it in the house. What do you guys think about that?
Well, Russ, I'm going to go ahead. I'm going to quote you on this. I mean, from obviously previous chats we've had on your streams and just have us talking in general, you talk about how you have your sleep at well night stock, right?
Yep.
You sleep well at night knowing you're 5 months ahead in your mortgage. If anything hits the fan, you got that room to have that comfort. So it's like technically if you really have it like towards savings, but you have that cushion. So do you sleep well at night knowing you're 5 months ahead?
Yeah, absolutely. And I love an author. I don't know how many of you guys watching know Morgan Housel. He wrote The Psychology of Money. He always talks about that him and his wife aggressively paid off their house, and all his finance friends say you made like a huge mistake on paper. He said, but on the spreadsheet, yeah, it's that money would have been better in the market, but the psychological boost and benefit from that and the sleep well at night effect, like you said, Harris, he said is off the spreadsheet. And sometimes you have to live life off the spreadsheet. Not everything will show up. So he says financially it was a dumb mistake, but psychologically it was one of the best things they ever did, knowing that they have the security of a house that they own. And I have a little taste of that because you're right, dude. If anything crazy happened, I at least know that we don't have to make a mortgage payment for almost half a year. And, I would be able to figure things out by then. So, yeah, I think you're right. It's completely individualized. And whatever helps somebody sleep well at night or whatever you sleep well at night, dude, I don't know. Maybe that's the right way to, I don't want to say the right way because I'm sure some people slept well at night buying AMC at whatever, $200 a share, but I don't know.
I like the idea of paying off your mortgage early only for the fact that it's just going to lower your expenses so much. When that's behind you, I just think it's going to make retiring early so much easier to do that if you don't have to worry about that payment. On the other hand, from my understanding, the people who say don't do that, just get your 30-year, pay it off, just make those monthly payments. The argument for that, I think, comes back to inflation, because if you lock in that interest rate, whatever it is, if you have a $1,500 mortgage payment every month, as time goes on and inflation does its thing, then $1,500 is not going to be as much money as it was when you first locked in your interest rate and got that mortgage. Does that make sense?
No, 100% on that. I'm sorry, Russ.
Oh, no, I was just going to say, and then I guess to add on to that, it's also what your rate is. So for me, anything extra that I pay toward the house, for me, I'm guaranteeing a 2.25% rate of return, which I think we should be able to do better in the market. And even, stocks have that equities have that price volatility, but buying a share of realty income should give me a better return, than putting that money into the house. And hey, it's still investing in real estate too.
Yeah, the way I looked at a mortgage was obviously it's an investment, it's an asset. The reason why I didn't start really investing hard or starting my journey till this year, and where I live in Austin, the average increase in rent for an apartment is between 15 to 20%. Where are you going to get a return of that if you just cut that off? That was my big move for that. It's essentially like getting rid of a credit card interest right there by just stabilizing something and getting something locked in.
Apartments, man. You guys ever look at MAA, Mid-America Properties? I think they're in the Midwest. I looked at them a while ago, and I just started thinking about them again. Ticker MAA. They're like one of the largest apartment REITs out there, I think. That was your cue to pull them up on Seeking Alpha. I'm just kidding, dude. I don't know if anyone in the chat has ever looked deeply gazed longingly and deeply into the eyes of MAA or anything like that. Or what about real estate? What are you guys doing with your real estate? I want to know. There we go. We got some comments about real estate stuff or mortgage. I mean, What am I talking about?
Man, I can't wait. I mean, I cannot wait to the last thing on being a homeowner. I can't wait to be a homeowner simply for the fact that monthly payment is never going to go up. That's like every year I always dread it. I've always been a renter. I've not pulled the trigger on a house yet, but that's the one thing is having those rent increases every single year. It's coming. It always sucks. So I'm looking to get out of that.
Hey man, I mean, if there's like I said, we're expecting this big correction, obviously the interest rates aren't favorable, but you can find a property with a really good price and then lock it in. And then obviously you'll have the advantage. You can refinance it down the road. Kind of like when 2020 COVID happened, everybody was refinancing to these low rates. So that could be an opportunity there.
Yeah, true. Kind of switching gears, guys, or getting back to the main point. So these interest rate hikes, the turbulence in the market, the jobs report, all this stuff. And Russ, we kind of talked about this on last week's live stream, actually. But I mean, what do you guys see? What do you guys see happening moving forward? Harris, I know prior to going live, we were kind of talking about midterms. I know that comes into play here. What do you guys think is next? What do you guys think is coming up next? And what do you think this means for us dividend investors?
Sure. So if we look at the data, and I'm just going to go analytical with this. Since 1960, all right, after the 12-month period after the midterm, the average is 16% return. The last time after a midterm it went negative was at the midterm for 1939, which is obviously the tail end of the Great Recession, as well as we were heading into World War II. So if we're looking at this on an average of 16%, our last midterm in 2018, the 12 months after that, we had a 12% return on the market. So if we look at that data, we could possibly be seeing some more green. I mean, we kind of got a kickstart of it the last couple of days, so maybe that continues if I'm going off the data, but kind of like we've always talked about, we don't have the crystal ball to determine exactly what's going to happen. I wish we did, but I mean, we could maybe see some more green heading to the next year.
Hey, Harris, when do you think we could expect you to be done with that crystal ball? Because you've been working on it, right?
I've been working very hard for it. Actually, I went on Wish and they had the authentic Madame Cleo one, and I'm waiting for it to get that so I can really get that vision of so I know exactly what stock's gonna fall what and buy it right there.
Dude, I need lottery numbers. I need Powerball numbers. Funny thing, my wife and I went out last Saturday to the movies, and in the parking lot, I found $2 on the ground. I couldn't believe it. That made my night, finding two freaking dollar bills on the ground. And then I was working with one of my coworkers, and he was, he's like, "Hey, you playing Powerball?" And I was like, "I haven't been paying attention." He's like, "Dude, it's at 1.5 billion." I was like, "Yeah, maybe I'll buy a ticket. And I was like, I'll fart around when it's a couple $100 million. I mean, I don't have time to be running to the store to buy tickets. But so we did that. I bought one ticket with the $2 I found. It's like Willy Wonka, the golden ticket. So we'll see. I usually don't play the lottery. I've always been told that it's a tax on poor people, so that they willingly pay. But hey, let's have a little fun with it, And I can imagine I could be $1.6 billion richer tomorrow. Although I think it's like 738 or so million after they take their cut. So,
Russ, wouldn't that be crazy? Like you found $2 on the ground, you use that to play the Powerball, you end up winning. You end up winning the Powerball off of someone else's money. That'd be insane.
Yeah, all of a sudden, Dapper Dividends channel stopped making content. You guys, I probably would still make it. I do enjoy this. In all seriousness, I do enjoy talking with the community, all of you in chat. I love doing the live streams, the interviews. I've really come to love just talking with everybody, so I don't have to bother my wife with all this stuff she doesn't care about.
I mean, Russ, if you hit the lottery, I feel like it's going to be Dapper Dividends, full-time YouTuber, full-time TikToker, full-time everything at that point.
Probably, because I wouldn't.
Russ he's gonna build out a full studio and hire staff and everything.
Oh yeah, it'll be crazy.
Mr. Poop's gonna get his own bedroom.
Yes. Dude, my family hates that. They're like, I can't believe the whole world knows what you call the cat. And I was like, it's beautiful. Deal with it. It's here to stay, baby.
Hey, Russ, man, I think honestly, if that situation plays out where you end up winning the lottery off those $2, I think because it's not your money that you used to win it, I think you're entitled to share it with at least those who are here in this live stream. Don't you agree, Harris?
I 100% agree. Let's go for it.
I think that's what the rule book says. Yeah.
Yeah.
Russ.
No, that would be fun.
The first thing you need to do is, if you're able to get this money, you dwell on it for like a week. You need to buy yourself some type of meet and greet with Pee Wee Herman. That's the number one thing you should do.
Oh, Paul Rubens, dude, that would be great. I will personally buy people shares of PepsiCo. Maybe I'll buy myself a seat, on the board at PepsiCo. That would be bad. I have no idea how to run a business like that.
So real quick, guys, some quick math.
Yeah,
so
let's back on track. Come on.
What did you say the Powerball was? 1.2 billion?
1.6 billion. I heard when I was in the shower. Everybody's all hubbubbing about it.
1.6 billion. Usually when people talk about this, they account for like a 50% tax, right? Like whenever people talk about the lottery, there's always like but half of that goes to taxes attached to it. So if you're taxed on half of that, $800 million, what would those numbers be? So let's say you invest all $800 million. What would that income be if you invested at like a 3% dividend yield?
Boy, that would be fun. Oh, dude, I would go on a shopping spree with my stocks.
I mean,
I think they said
you can live off the. You just live off the div. It's ridiculous. I can't even fathom that.
It'd be more money than you can spend. If that happened, you'd be making at 3% at a 3% dividend yield. You'd be making $24 million every single year just in dividends.
That's almost Warren Buffett money,
dude. That's crazy.
No, it's so fun to think about. And I think they said it was the lump sum was 738 or 758 million. So you're right there. So it's about 800 million.
Yeah. So either way, it's between 23 and 24 million dollars every single year without having to lift a finger. My goodness, man.
Yeah.
It's possible. Stranger things have happened, right?
Dude, I love Stranger Things.
Oh, don't get me started.
Yeah. All right, what are we talking about? What do we do? Well, let's talk to some people in the chat. Yeah, I've seen some good comments go by. I mean,
let's open it up to some Q&A. I think I'm going to scroll back up to the top. We'll throw some on the screen here.
Hey,
and thank you guys, all 77 of you guys who are still here, tuning in with us. Thank you guys for hanging out with us tonight. We're having it's so much fun being able to chat with you guys and being able to do this. So thank you guys again for joining me tonight.
But that's part of it, man. We're supposed to go on little tangents, and it's just fun to talk and dream and daydream and think about things like that.
Yeah. I mean, definitely that. At least I can still say I'm in the green and scratch off tickets, so I'm gonna still count that as a win, just like I'm still in the green in Vegas. So,
Oh, look at this guy. What's your
Hey,
game in
speaking of
Vegas?
which,
so my game in Vegas is the Deal or No Deal slot machine. Went to Vegas. I had $20. I said I'm gonna gamble $20 to say I played in Las Vegas and lose the money and have that experience. I got the bonus round within like the first 3 plays. I picked the briefcase. It turned into 500. Eject, walk away, get 2 more free beers, and that's
Yes.
it. We're done.
Yes. Beautiful. Smart man.
hey Russ. So
What's up?
Russ told me earlier today, Harris, that he's coming out to Vegas for Thanksgiving.
I told my family, I was like, hey, you know what? Ryan and his they invited us to Thanksgiving in Vegas. My daughters are in, dude. So I don't know.
He said we could.
We'll see what the
He said we could sleep on his couch. It's totally cool.
Yeah.
Oh yeah. I mean, we're dying to go back to Vegas again. So,
Dude, Harris, you guys should come,
It's
man.
been too long.
You definitely should. Okay, let's see if we could find a good comment here. So, Pat Schuster here says, we'll kick it off with this. Can you talk about IEP? Do either of you guys know about
Is
this
that
company?
Icon Enterprises? I think they have a stupidly high dividend yield.
Let's go over to the screen.
I remember there being issues with Icon, Carl Icon.
Yeah. I remember looking at it a couple days
What's it
ago.
yield?
It might have even been
14.
Pat who asked me about it, but let's take a look at the dividend stats. So obviously a very high yield, guys, but no years of dividend growth. And if I remember correctly, the dividend's kind of sporadic.
Yep.
No, I guess not. But just not much growth there. And what's
There
happening
was
with the
something
financials
I looked
real quick?
into it a while ago, and there was just something that turned me off about it, and I don't remember exactly what it was.
Well, I mean, right off the bat, there's no revenues declined over the years. Can you see that? Yeah, you can see that.
Yeah.
Revenues declined over the years, and I think right there, that alone is a pretty big red flag. I don't know. I really don't see the draw to it outside of the high double-digit yield.
and we all know when we chase the yield, it's a trap in Star Wars. It's a trap. So,
Dude, their free cash flow payout ratio is all over the place. In 2019, it was negative 94%. 2020, it was negative 287. And then in 2021, it was 13,000%. And then now it's a manageable 76%. Their free cash flow payout. The free cash flow payout ratio. I'm looking on Simply Safe.
Real quick,
And they dilute shareholders like a mofo, dude.
Real quick, can we talk about
like
Intel's? Can we talk about Intel's recent earnings report? Did you guys get to go through that at all?
I didn't. I probably should have, but I haven't gotten to yet.
I looked at it very briefly. I know that they beat expectation, but with Intel, I have a small position in it. I'm as tempting as it is to really build this up, because obviously they're doing a big rebuild with everything, and I feel like right now they're at the bottom as far as the rebuild, and it only goes up from there. I'm just still being cautious as far as how much I want to add to Intel.
It's a turnaround, man. It's a turnaround. And I know they did good they did well because the share price popped. So the market liked it, It's
the big thing I saw, and this happened last quarter too. They were negative free cash flow again for dividend, which is not the best news, obviously, for us dividend investors. But at the same time, that's probably not too surprising. We probably could have guessed that going into this earnings, and they still have a pretty decent amount of cash on the balance sheet to be able to cover the dividend for now. So I guess it's not too concerning, but if nothing else, it's something to keep an eye on and definitely look out for. And we'll see what happens this next quarter. But 2 quarters in a row of negative free cash flow, I guess, considering the circumstances, is number one, not the most surprising, but also number two, something just to look out for.
Yeah, that's the first time in a few decades, but they knew that, and they said that, and they made everybody aware of it. Pat Gelsinger, a couple earnings ago, said that they were going to be negative free cash flow for a little bit because of all the investing. But they just did. Mobileye just went public.
Yeah.
They have a lot of shares in Mobileye that they still retain, that they can just easily start selling, and when they need cash, they're going to sell positions in Mobileye. And I think they're going to be okay.
Yeah, I think they're going to be okay over the long term too. And Mobileye, like so far, that's boded pretty well for them, right? Because Mobileye's up since the IPO, I believe.
Yeah, it wasn't too bad. It was pretty nice. They did very well on that for what they bought it for, which I think was like 15 billion, and then what it IPO'd. So they made they definitely made some money there. And by the way, Intel should be coming up for a dividend increase here. We'll see if they do it. Their last one was 5% in January of 2022. So they should be announcing that probably next month, I would assume.
My guess on that is, since they're being conservative, obviously with the cash flow and like we're doing all the cuts in employment, I'll say less than 5% of a raise. I'm gonna just throw that out there.
Token raise.
Yeah. Let's keep the stat and let's not crash the stock by just cutting the dividend or not doing an increase.
Yeah, I will. The last thing I'll say before we move on, I got another good comment to pull up here, but the last thing I'll say. So one of their the big things on their agenda is to reduce expenses, and it looks like they've done a pretty solid job of that so far. This earnings report compared to last earnings report seems like they're making progress. One sec, my cat's scratching the chair. I gotta stop.
Get the water bottle. You gotta get that water bottle, man.
Oh, dude, I have one in the kitchen. I had it on my desk earlier because he'll do this thing. It's so weird. So I've got a lamp right over here plugged into the wall. After his mid-morning nap, one of 6 throughout the day, he'll come over to the lamp and he'll lick the outlet. Just sit there and lick and chew on the cord, and it's the most disgusting sound, guys, like you've ever heard. It's worse than nails on a chalkboard. It's so gross.
Oh, poor guy. He's trying to end it all. Tell him he's so young. He has so much to live for. Don't do it. See, this is the beautiful stuff that, Are you seeing him glitch too? He's going into the Matrix, everybody.
I'm just moving too fast. All right, let's move on to this next comment here. This is from BM Weldon, who says, International Paper has a 7% dividend yield. Thoughts? Do you guys know anything about this company? I don't think I've ever heard of it.
I don't either.
Yeah, I know. I've done work for them back in the day. Paper, like massive paper packaging company. I pulled them up on. They have a dividend safety score of 70, yield of 5.49%, but they are not growing that dividend. It actually looks like they did a reduction in September of 2021. They cut the dividend a little bit, so that's not good. They have a high payout ratio, 97% right now. Free cash flow payout ratio, by the way, which is up from 53%. So, yeah, it's weird how they give it a safety score of 70, but I would probably look elsewhere. The 20-year CAGR is only 4%, so I'm not sure that juice is worth the squeeze on international
looking
paper.
At the financials, we're seeing declining revenue over the years. We're seeing dividend per share does appear to be going up, except for what you said, Russ, 2021 when they cut it.
Yep.
Buying back shares slowly but surely. The valuation's not too bad. 8.5 for the PE ratio. They've dropped about 30% year to date. So could be at a discount. Nice high yield. Seeking Alpha has them at a 5% something yield. But like you said, I think there's better options out there. Is this in the materials sector? Yeah, paper packaging. As an alternative to this, I would maybe look at PKG. That's one that I've been kind of looking more into lately, and seems to be a pretty decent company in the materials sector. So I would maybe check that one out. I think kind of like you said, there's better options out there.
Yeah, it's crazy on the industrial side of it. Have you seen the last month stats on Caterpillar?
No.
It's up I think 25-30% on the month on the stock price. It's ridiculous.
Dang. Wait, for the month?
Yes, in the last 30 days.
For Caterpillar? Dang,
yes.
Let's go check that out real quick. What happened? Do you know?
They had really good earnings, if I'm not mistaken on it. If you look at the last month.
Yeah, so up 30%. Looks like they reported earnings at the end of October. Wow, man. Okay. Yeah, huge jump.
They've had a crazy jump. That's been a big winner for me.
That's a pretty nice revenue beat. Well, that's a pretty nice earnings beat too.
Mm-hmm.
Let's see. Yeah, and they're buying back shares. Great.
So I hate how they do that. I thought I saw something there say non-GAAP. They're non-GAAP.
Yeah.
I don't like that. I'd rather see the GAAP. You know what I mean? It's like I heard once when they say non-GAAP, it's kind of like a kid failing a test and telling the teacher, well, if you just remove all the wrong answers, I aced the test, you know? So I try to keep focused and look at the GAAP numbers because things can get pretty goofy with non-GAAP. But yeah, that's why you got to dig into stuff more. And if you're not willing to put the time into it, I see the comments on the side from Pat, what's your favorite ETF? And then Caleb answered for us and said, they're going to say SCHD, no point in asking. That's probably true. What I would. Probably right, Caleb.
What's SCHD?
What's our favorite ETF?
I know. I mean, it's great. Do want to give a quick shout out there to 40 Bands. He's from Twitter. He's been following me on Twitter, so I want to give him a quick shout out there. He's a pretty cool new person. I recently got into Twitter, and I've been meeting so many new people, so that's been like a whole nother universe recently for that.
Oh, baby, and is it a whole nother universe?
Oh, my God.
I'm on Twitter, too. That's my handle. And I just did an interview with Dividend Dave, and he called me at Rusty Ram 78 on YouTube. So it's a little confusing, but hey, people still found it. I'm still the top interview that he's done. So yes,
that was a really good talk. That was a really good talk. I actually watched that episode while my wife was getting her hair done, and I'm just waiting in the car. I literally listened to that whole episode while she was getting her hair done.
Oh, dude, thanks. Well, I'm glad you enjoyed it, everybody.
I need to check that one out. I'll make that my treadmill my treadmill watch tomorrow. I'll keep me occupied.
You listen on double speed or regular speed?
Regular speed.
I'll probably do double.
Really?
I probably do double.
Yeah. I listen to a lot of things on double.
All the earnings reports I listen to on double speed on Seeking Alpha.
Yep.
And then I read along with the transcripts.
Yeah.
I got a question for you guys.
Yeah.
This year, we always talk about like our biggest mistake in the stock market or whatever. What's the mistake as far as like something you were watching, you didn't pull the trigger on, and it went up, 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 up?
I'm making one right now with my wheel options. So JP Morgan, I got in with the cash secured put, I was in around 113. And at one point it was down to like 103. And I had a covered call that I kind of didn't want to hit, but it hit at 122. And then right now it's at 130. So I got like, I don't know, $150 for it, but it's hard. So that's kind of the risk you take. And I'm sitting there today thinking like, why don't I just hold it? But then again, if the market drops, you're not going to sell. And Starbucks, by the way, I wanted to get back in on them, and I've sold 2 weeks in a row. I did last week an $82 cash secured put, didn't hit, and then an 84 that I thought was going to hit until they came out with their earnings yesterday, and the damn thing shot up 10%. So yeah. I'm out. So here's me looking like, well, I got $114 for an $84 cash secured put, meaning I didn't get the shares. But if I would have just bought them at $84 when they were right there, it was at like 93 today. So I'm kind of hoping they come back down. But for me, that's a little bit of it, is just some of these stocks that are wheeling. I guess I'm doing the wheel option. And now the market is just marching up and up. And I've got from that JPM, the shares, I have $12,200 just sitting there, and I'm watching all these stocks going up and getting more and more expensive. And I'm thinking like, and my cash is just sitting there. So I'm hoping for a pullback. That's kind of my thing. It's
going to be hard with Starbucks because if you look at the earnings report, one of the most impressive stats on the earning report was I believe it's either 18 or 19% growth as far as people using their reward system. And obviously that is the biggest thing for Starbucks, is that's what's driving the cash flow into their business. So
that's their float, man. That's their float.
That went up 18 and 19% in the quarter. And that's amazing. And, that's just going to help Starbucks keep, continuing the path for like, the crazy growth they're projecting for the next 10 years. So, I mean, it's going to be there. I'll say that the one I wish I would have pulled up for it was McDonald's. And I'm going to talk why. McDonald's, I was looking at it around like when it was around 220 to 222. The reason why I didn't pull the trigger on it was about all they had a pretty good decent amount of revenue from Russia, and when the whole Russia thing happened, that kind of got me to pull back. And obviously, you got to factor in China, but their earnings have actually done really good. Where I thought they were going to take a hit, so that's like kind of like the one I missed on this year. Is what it is. But hey, I did buy the adult Happy Meal, so I was pretty happy with that.
I was gonna get one of those. I should.
Honestly,
what was the deal with that? What was that?
Okay, Ryan. So all it literally was just if you bought like a number 5 or whatever, it's just literally that. It was a curated menu, but they had a pretty cool, like trippy, psychedelic, like McDonald's figured toy. I just wanted to get a Grimace because Grimace is just amazing, and I didn't get freaking Grimace.
Dude,
You
I'm
might
sorry.
just you might just have to go back.
Oh no, it's over. That was very limited. It was to the point where
okay.
too many people were going to McDonald's to get these Happy Meals. People on TikTok were saying, "Please stop ordering this. Like it's just driving up, or like they can like not enough employees could handle the demand for these Happy Meals."
Really? Man, I should have bought more McDonald's too. But I did want to point out one more thing about Starbucks, dude. The pumpkin spice up 70% year over year.
Insane.
The cool thing is, guys,
crazy.
I was thinking about this. I'm like halfway through the earnings report, but they're talking about kind of the things that they've done, that they've been found success in, the pumpkin spice, the cold brew, which actually I thought it was very interesting. I didn't really know that they'd really pioneered the cold coffee drink movement that's now everywhere. People drink more cold coffee. I don't know everyone, but people drink a lot more cold coffee than they used to, and that was because of Starbucks. But I was thinking about this company from like the future. There's so many different ways that they can continue to innovate and push out new things, because it's not just coffee that they can do that in. Just think of all the different ways you can customize these drinks. Like whatever new flavor they come out with, they can do that with syrups, they can do that with cold foam, they can do that with all these things. There's just so many ways to come out that Starbucks can come out with new things.
Not only with the drinks, the licensing. It's with any business, the licensing is just a whole nother thing. If the company gets the licensing right, it just creates this behemoth.
Yeah, and PepsiCo and Nestle are both partners with Starbucks. And I had a few more numbers on that, but dude, their same store sales, US sales growth, actually North America was up 11% overall. Their revenue was up 11% on a 13-week basis. I love this number. Starbucks' mobile ordering made up 44% of the sales mix, and delivery was 24%. And on top of that, last thing, 763 new stores. It brings them to over 35,000 stores total. I mean, just a great. I should have just bought those. I'm hoping that they'll come back. There's going to be another dip, and I'm just going to get in. I think I'm going to get those 100 shares back.
Well, at least Ryan, you're on the green now in Starbucks, right? Because of this massive pump.
Yeah, and I was going to say, man, so to answer your question, I really don't feel like I don't feel like there's been anything. I don't feel like I've missed out on anything this year. And I was going to say kind of the inverse of that. I bought a lot of Starbucks when it dipped down into the low 80s and into the 70s. My average cost per share was like just under $100 per share. But I was able to get that to like $87, $88 per share for my average cost. So I was buying up a ton of it. And I probably doubled my Starbucks position this year just from dollar cost averaging more into it when it was cheaper. And I got to say, like, that's an opportunity I'm so glad that I took advantage of, because I'm now officially in the green for now, because it's up above $90 per share. But yeah, man, that was one thing I'm so glad that I did, just because they just demolished earnings this quarter. It's fun to read about, and I'm excited to finish the earnings report. But yeah, that's one thing that I'm glad that I did. Otherwise, honestly, I don't feel like I've missed out on too much.
I feel you. Hey Ryan, I'm seeing some chatter here in the chat about Best Buy. Let's bring up some Best Buy talk here.
Yes.
Yeah. So, what do we see here at Best Buy? Oh,
I haven't been in one in about 10 years, but
Charles said Best Buy dropped big. Let's jump over to Seeking Alpha real quick and see maybe what happened with Best Buy, because I have not I've not heard anything about this company.
It's funny, Russ. You say you haven't been there in a couple of years. I got one like 5-10 minutes from the house. I go in there just to go walk around and great. It's just a kill time. I love Best Buy.
I know, haven't they? Don't they lease space out in it to like different vendors or companies? Like they'll have Apple will have a space, and I don't know, Samsung will have their space or something.
They do. A lot of the cell phone companies have the space in there. For sure. I don't know if what the term is whether it's like a lease or how they have it set up, but I know JM here on the comments is talking about how they want to make it into like showroom distribution centers, and honestly, Best Buy has done a really good job transitioning their retail business onto online. The biggest thing with them as a customer, like I've had my Best Buy credit card for 10 years. That's how I make my big purchases on no interest, get it paid off way ahead of the time, is that they're price matching and they're getting competitive. They're also building out a lot of these like warehouse spaces. So they are really trying to really get more of that online shopping space. And they've done really good. I know in the 2000s, they were doing really bad where it was looking like it could be a Circuit City where it could have shut down, but then they got new leadership and turned it around. So I think Best Buy has been doing a good job with like getting with the times for that.
Are they part of that BOPUS, the buy online, pick up in store thing too?
Oh, yeah.
I would assume.
Yeah. 100%. I've done it myself. It's like if it's an item I don't know where to find it, I'm literally going to go ahead and just do it, go there, pick it up, and make my life easier.
Yeah, I got a Best Buy right down the street from me, man. I just, for whatever reason, I that's why I'm surprised that there's such a solid dividend stock, because to me, they're like dead. Once they stopped selling CDs, I used to go in there, and there was always right in the middle of the store. They would have 50 million CDs, and it was just, they're always expensive, but hey, we did what we had to do back in the day. Did you guys buy CDs, or is this too, oh my God, don't tell me you didn't buy CDs.
Well, I won't get this out because it's too messy. I literally have a whole box here. I collect vinyl, and I have a full box of vinyl that I collect.
That's different. Vinyl's cool, man. Vinyl.
Russ, man, I used to burn CDs so much they used to call me the fireman back at elementary school.
Hey, I was one of the first people that started using Napster. My buddy turned me on to Napster, and I think I was on it for like 10 hours straight the very first time I used Napster, and I had dial-up, and it would take forever. I remember like downloading some like crazy Depeche Mode mix that I'd never seen before and just waiting, and it was like the anticipation when it comes, and then it would complete it, and I would play it, and I would burn CDs, and that was bad. And then Lars from Metallica didn't like it, and it got shut down. So.
My memory, Napster was before my time, unfortunately, but I did do LimeWire. Please don't.
I remember LimeWire.
Feds, please don't get me. But one of those things where it was really interesting about that time in life was you'd find a song, right? And I'm going to use I still know this, and I still have never been able to find this song. It was titled as Korn, like the band Korn, and it says it was something related to the Queen of the Damned soundtrack. And whatever that, it wasn't Korn. Later on, I found out it was the most amazing song. And I literally listened to the entire Queen of the Damned soundtrack to find out it's not there. I'll never find that song again. But that was a really interesting point in time where like they would just mislabel things, and you have it. This is the way you know this song, and you're never going to find it when you're trying to figure out what it really is.
Somebody just put Bear Share. I forgot about Bear Share. One quick thing for everybody that might be a Game of Thrones fan. I know Harris and I talked about this, and I really poorly was telling Ryan about this, but you did work for or contracted for somebody that was on Game of Thrones, right? I want to hear about it again. Let us know.
So prior to becoming a podcaster and being an adult, I used to work in the music industry. I used to book and route tours for a living. And with doing that, I get a bunch of side gigs. And one of my side gigs was I got booked to do an entire tour run for Florida with Hodor from Game of Thrones. So literally I was his babysitter for a full week. Yes. And honestly, it was the most amazing time ever. The nicest guy you'll ever meet. Very professional. Literally took time out to meet fans and was totally cool. Like he would get annoyed with the Hodor thing, but he still was such a good sport. But the one time I learned that we get one of those Ford Echo lines, and this dude is 7'4", and he could not fit in the Ford Echo line. That was one of the most interesting like times of my life, just doing that for a week straight. So that's usually my fun fact. Whenever I'm at work, they go, "What's your fun fact?" That's always my to-go-to fun fact, is that I literally got to babysit Hodor for a week.
He's a DJ. Hodor is and I looked him up on YouTube and I was watching it. I couldn't believe it. I was like, Harris is yes. And speaking about guest appearances,
Peanut has been getting some weight there.
Dude, he's been a wild man these last like 20 minutes here. Oh my God, I just want to chase him out of the room. So I figured this might kind of appease him for a few minutes. But guys, I wanted to put another comment up on the screen. This is a good question. And I'll have Peanut answer this one too. If you guys had $1 million and only 3 stocks to put it in, what would you put your $1 million in? Russ, why don't you kick it off, man?
Well, Pep and PG would definitely be in. And then I may put $1 million to do 3 of them. So, man, and by the way, hard.
No
it'd be
ETFs.
No
ETFs. We got to do straight individual stocks on this one.
That'd be mine. Procter and Gamble, PepsiCo, and Johnson and Johnson. Just no, I wouldn't have to worry about it too much.
Yeah.
All right, I'll go next. For me, Procter and Gamble, KO, and third one. Honestly, and it's gonna be the most boring pick. I'm gonna pick WM.
Yeah, boring.
That's a good one, man. No, that's a good one.
I love my trash stock.
Yeah. No, dude,
that stock
really
is trash.
So, it's a trash. It's a piece of trash. So.
So I would, I definitely would choose Procter and Gamble. No surprise there. I think Starbucks would be another one. And
you have to do it with Starbucks.
I think for my third one, probably either Lowe's or Snap-on. One of those two.
Ooh.
Snap-on's 5-year CAGR is amazing right now.
They just raised their dividend again, 14%.
They beat inflation.
It was today, yeah.
They
you know what, inflation. Too, though? So Mountain High right here says EPD. Throw EPD into the mix. That's another good one, too. I don't know if you guys are too familiar with EPD. Just a
Enterprise Products Partners, yeah.
Yeah. Great. I mean, super solid company. Honestly, Chevron might be another contender, too. I was listening to their earnings report yesterday. They put out some really good earnings. They're looking pretty good right now. I mean, obviously,
they're drawing the eye of Sauron, the eye of the government. They want to do the windfall tax on them. I think they're going to start paying out special dividends, just giving that cash, get rid of
some cash. Yeah,
I think so. Oh, and speaking of special dividends, for anybody that's invested in Albertsons, temporary blockage on that special $6.85 special dividend. So kind of interesting. Government doesn't want to pay it out.
Yeah, that was from, I think, the Attorney General for the state of Washington, right?
Washington, yeah. Yeah, that's interesting. I was going to get about $75 or $78, something like that. I only have 10 shares, but man, I was like, I was already looking at what I'm going to spend that on.
Hey, Russ, man, we're getting too predictable. Everyone here knew that you would say Pepsi and Procter & Gamble, that I would say Starbucks and Procter & Gamble.
Well, it's easy to Monday morning quarterback, Ryan. Is that no? Yeah, armchair quarterback. Did I say it right?
Quarterback.
Armchair quarterback. Yeah.
That's okay. That? I don't mind being predictable. Like that's the thing with dividend investing. It's not supposed to be. You're not supposed to be doing all these different things. It's just, it works because you're consistent. That's the only way to have success with this. Is just being consistent and buying stocks day in and day out. So I don't mind being predictable there.
No, for sure. I mean, like I said, in the stock, especially what we do, Peanut. Oh, he wants to eat Peanut. I think Peanut wanted to talk about his top 3 dividend stocks. I think I remember once, Ryan, when I was in the chat watching the stream, I asked you what was Peanut's favorite dividend stock. And I remember you said it was
Altria Group.
Altria Group, because he loves to smoke.
Dude, he's a chain smoking machine. That's why he was just meowing, because he's got to go out for his 6 o'clock cig.
Mm-hmm.
He's not all hopped up on the catnip, huh?
Yeah, I'll do this, guys. So they're talking about being predictable. Let's be unpredictable here. Okay, I'm gonna call this a YOLO stock. If you had to pick one stock that is not talked about online, not talked about in this community, that you would either invest in or do something with, what would it be?
So it's kind of like an underrated stock, not one of the common ones.
Not even uncommon.
Well, I have a lot of thoughts. One of them I actually thought about buying today was Lumen Technologies, ticker LUMN. They announced their earnings weren't too bad, but they're suspending their dividend and they got absolutely hammered. But I think that they still are having good cash flow. They're buying back shares, which I kind of wonder. They have a new CEO. Maybe that was a ploy where he's like, okay, that's what we're going to do. We're going to suspend the dividend. Shares are going to tank. Then we buy back shares because they announced, I forget how much, if anyone knows, billion or so share buyback. So I think that's pretty cool because if you're a company, you should be buying back shares when your stock is really, really down in the dumps or, not super highly valued. But yeah, that's one. I think they'll eventually reinstate it. They suspended the dividend to put it toward paying down debt. They sold off one of their businesses and I think they're going to turn things around, but they're interesting. And I thought about picking up a dozen shares or so today because they're like $6 a share now. So that'd be mine. Interesting,
Good. Ryan, what's yours?
I could probably name 50 others too. But.
Honestly, man, I'm struggling to come up with one. I really don't have an answer. I can't think of anything good right now. Do you have one?
Yes. So I don't think I've ever heard anybody talk about this, and it's fine because one of the rules I have, and I've said once my portfolio is built out where I'm happy with it, I said I would allocate at least 1% to WWE stock. And as you can see in my background, I got all the freaking thing. But the reason why I do it is I know their business very well and what the potential is into there. I know right now it's a little bit overpriced and I'm waiting for the right time for it to fall. That's my random one that I would do. And it's just because obviously, I mean, if you look at my background, I literally have wrestling inspired everything. The one thing that I always talk about with people is don't copy somebody online or don't do what you're saying. Like you have to at least invest in one stock that's your passion stock, whether it be for, I'm just going to do examples out here. I told my spouse, like, you love Ulta. If you're passionate about Ulta, why not invest in it? If you like to go shopping at Ross, like you got to find one stock that you're passionate about that nobody talks about. And obviously you look at the numbers to see if it makes sense, but that would be my one that I would do.
I think Harris,
WWE.
Go ahead.
No, go ahead. I was just going to say they pay a 12-cent dividend.
It's very small. But for me, it's obviously right now there's been a lot of change as far as leadership goes, and they've been making really, really good decisions within the last 6 months of how the product's been getting better. Obviously, where they had a 10-year they're still in the process of a 10-year contract with the Saudi Arabian government, where they got $500 million for 10 years worth for doing shows there.
Do you think they're a good candidate to get bought out once the McMahon Vince departs? Because who's running it now? Isn't Stephanie McMahon and her husband Triple H, right?
It's Stephanie, and they have this guy named Nick Khan, who's like a co-CEO with them. My theory, and this is me going way back as a wrestling fan, the theory I've always thrown out, and I don't think it'll happen, I've always said that either Disney or Universal would buy them out and then do the WWE Hall of Fame in either Disney in Florida or do it in Universal Studios in Florida. That's always been like my conspiracy theory. I know that when WWE went to Fox, which was like the big push for them, the numbers weren't as good as they thought they were going to be. So I think that kind of got some pushback from like doing the buyout. So, but you never know though, man. Somebody can throw them off a crazy offer and just do it. But that's always been my conspiracy theory, who would buy it.
I think they're a candidate to be bought out. I could see that. We'll see.
Yeah. I'm looking at the chat here. Rex Randall posted Texas Roadhouse. They're actually been doing really good this year, and it's an amazing experience going to Texas Roadhouse. So I just want to shout them out for that.
I don't feel like Texas Roadhouse is like under the radar though at this point. Like
no,
Joseph Carlson talks about them a lot. I know Texas Roadhouse gets talked about in the Discord every single day. It's becoming a pretty popular stock.
Yeah, Joseph has been going like that's like every episode is just talking about Texas Roadhouse pretty much. But I mean, it's one that I think I mean, if you want to go last year, Vici wasn't very popular, and then Vici kind of came out of nowhere.
Because of him. Like Joseph, just talking about Vici made it very popular stock, I feel like.
Dude, to tie this back into you guys, I talked about Vici, but when we were in Vegas last time, and I put this on I was brand new on YouTube. I bought shares of MGM Properties while we were eating pizza in New York, and I took a picture of the moment I'm buying shares, and I told the kids, I'm like, check it out. I now own this casino, right? Yeah, kids, they didn't care. They just wanted more pizza. But then MGM Properties was acquired by Vici. Vici is I don't know. They own basically the whole strip in Vegas. They own stuff in Macau. They own a few other places. But yeah, Vici is really interesting. Really cool stock.
I'd like to add that REIT to my portfolio. I feel like that'd be a fitting addition to my roster of stocks. But I guess, after thinking about it for a couple more minutes, like if I had to choose one stock that really nobody talks about, that I think should be on more people's radar, it's going to be KRC, Kilroy Realty Corporation. This is like the most recent addition to my portfolio. I've had it for a couple months now. They just put out quarterly earnings and they crushed it yet again. I can't think of one thing that I don't really like about this stock. I mean, they're a real estate investment trust. I guess if there's one thing, if you want to cherry pick and really just come up with something to complain about. Mm-hmm. They are an office REIT, and I know there's mixed sentiment about office REITs, especially due to work from home being popular. But I mean, even despite that, they're still holding strong and putting up really good numbers. And I know that the CEO, I like him a lot actually. I know he operates the company pretty conservatively, and I think that should be on more people's radar.
Yeah,
it's funny you're talking about office REITs. I had read something a little while back in New York that they're thinking of, because so many people are vacating the office buildings, that they're thinking of converting a lot of them into apartments or condos or lofts. So that is interesting. And I wonder if some of, like KRC, I think you said, has some residential exposure. I wonder if they would ever start converting some of their properties to apartments or condos. That would be interesting. I don't know how that would work, but interesting thought.
I mean, on that note, Billy says office REITs and malls both out of favor, but still, like SPG, one of probably the most popular mall REIT in
they had really good earnings, right?
They're crushing it. Like those. I say this all the time. SPG gets brought up. I've never been to a Simon Property Group property that I've not just been like, this is awesome. This is cool.
There's only one time where it didn't work out where I've seen it. So I don't know, a lot of people know I'm from Puerto Rico, so I'm half Hispanic. They opened a Simon Property Mall in like the capital. It actually flunked. It's like the one time I saw that it didn't do well, and it's just because they try to go to upscale depending on what the economy is, and that was like their fail. I think it's still open, but a lot of shops there closed down because they tried to go too high with it. But overall, though, everywhere I go, the joke is every time I go to Simon Properties, like there's a little Tesla shop to talk to sell your Tesla. There's like the same shops everywhere.
Yeah. So kind of a random tidbit about SPG. So the Forum shops here at Caesar's Palace, which are just the fancy, swanky shops, those are owned by Simon. That's a Simon Property Group property.
I got pictures of it, man. I was telling the kids, because then I was like, check it. And I didn't even think of it when I was there. I bought MGP Properties, which is now Vici, and SPG.
Yeah.
And Bill here, kind of on this point, asked, how many of y'all have been to a mall in the past 6 months? Not me. Honestly, I've been to a mall numerous times, like just in the last couple of weeks.
So I will go to the mall just to go to the pretzel place, to be completely honest. But
go along the pretzel place.
I need to make sure that Auntie Annie's does not go out of business. I need that to keep running. But honestly, for me, I'm kind of weird. I like to go walk around and just go see what's up. It kills a day.
Yeah.
And I'm trying to look up real quick who owns them.
But even even going back to SPG in the Forum shops, like I was there, it might have been a couple weeks ago, and it's Vegas, so it's a little bit different just because all the tourism, but like it was packed. Like there were people all over the place. That's just one of those places. It's never just like a lot of the Vici properties. Like there's always going to be some sort of demand for it, I feel like.
And the thing,
look at
the thing that I'll be curious about, and I see a lot here in the comments about like how malls are out of favor. This is the one thing that I would like to see happen. So I was reading an article recently where by the end of 2020, e-commerce had done 8 trillion in sales. By 2027, they're projecting this to 27 trillion. If that path goes there, maybe a lot of these places, then that could be a possibility. I'm really curious to see how the next 5 years, how does e-commerce overtake in-place shopping?
Yeah, I think the important thing for a lot of these companies is to have both a physical presence and do sales physically, and also have an online presence. I think
Like
that
Best Buy.
balance is like Best Buy. Target also is very good at this.
Yeah.
I think that's going to be important for a lot of these companies moving forward.
I think Walmart's trying to. I think Walmart got a little bit late in the game, but I know Walmart's trying really hard with this too.
Dude, J&J Snack Foods, ticker JJSF, owns Auntie Annie's, but it says Auntie Annie's at home, but I'm seeing that they also own Sour Patch Kids. I thought Mondelez owned that. Might be anyway, interesting. I've never really looked at J&J Snack Foods. $2.79 billion market cap. They own tons of, they own Slush Puppy, they own Mr. Twister, Soft Pretzel Bites, Super Pretzel, New York Pretzel, the Bavaria, Super Pretzel, Bavarian. Dude, they got all kinds of stuff there. Holy cow. Dividend safety score of 90. Only a 1.91% yield, but
what's the growth like?
18% 10-year CAGR, 16 years dividend growth streak, 11% raise in August of 2022. Interesting. And
All right.
they got some negative free cash flow going on right now, so we might want to take a little bit of a deeper look at that before you go buying JJSF, Harris. Interesting. Dude, this is what you come to this live stream for, hard-hitting analysis, and you learn on the fly.
All about talking about how I'm going to go to the mall to keep the pretzel shop open.
Well, there you go. If you win the lottery, you can buy Auntie Annie's.
Hey,
Straight up.
I'll buy a franchise.
Look at this. We got Pat Schuster. He's a Slush Puppy distributor. Dude, you never know who's going to pop up into these things.
For sure.
You never know who's watching. So I think let's make this next question the last one of the night. It's 6:07. We've been going about an hour and 7 minutes. It's about time to
It's
wrap it up,
8:07, Ryan.
Yeah. Well, but anyway, Andy wants to know.
Lies. All
Do you guys
lies.
have Roth IRA accounts as well?
Yes, 100%.
You do, Russ, you do as well?
I do. And speaking of Simon Property is the last REIT that I have in my taxable. And it was looking like I was going to be able to use it for a tax loss harvest. But that's one of the ones that I'm going to sell in January. As soon as trading starts after the new year, I'm selling I think I have 10 or 11 shares of Simon. And like a $91 cost average or something. But I'm going to sell those and move the money to the cash to the Roth, and then just rebuy it back in the Roth. So I do have a Roth, man. I maxed it out 2 years in a row now.
I was trying to show you guys the time. Everyone's saying, Ryan, get the time right. It's 9:07. It's 8:07. I was trying to show you guys. No, it's 6:07. No, this is my little seniorita. My little seniorita. I keep her in the background.
Yeah. So to kind of going off here on Andy's comment, I recently did an episode in the podcast where I did timelines of like if you just maxed out your Roth. So if you cap it at 6,500, which we're basing it off of, you started off next year in the Roth, which is the new minimum you could, the maximum you could put in. I capped it at a 5% CAGR throughout the years. If you start investing at 20, and I kept it at 6,500, let it grow. I think the final number of it was like 5.5 million, what the portfolio would be worth. And I think it was like almost $300,000 in dividends a year if you just literally did that and nothing else.
Jeez, man.
Awesome. Starting
That's
early,
crazy.
man. You got to start early.
All right,
Earlier
real
the
quick,
better.
guys. Last one. I got to give a shout out to my guy Mark, Trading with a Dummy. He's got a good channel here on YouTube. Yeah.
Nice.
Good dude.
Hey, we're chatting. We're setting something up. Mark, get back to me, baby.
Yeah.
He hit me up on Twitter. He wants to do a thing.
Yeah. Mark's a
pretty
good
cool.
dude. Mark, you got to join us on the Dividend Happy Hour one time, man.
Absolutely.
But,
Yeah.
he wants to know. Go ahead, Harris. Sorry.
He had a comment earlier saying, "I can hear you guys talk for 3 hours." That's interesting. That was an interesting comment there.
Dudes.
I don't know if I want
like it doesn't feel like we've been going. It doesn't feel like we've been going for an hour. Like this is time has definitely flown.
Yeah, in all seriously, yeah, you're right. It does.
But what about IIPR? He wants to know. Do you guys know? You guys know IIPR, right?
Yeah, they've had some issues with tenants, and I looked it up. Yeah, King's Garden defaulted. That was they generated about, I believe, almost 10% of their rent in 2021. But King's Garden and Parallel were two of their bigger tenants that defaulted. But I think they're going to reach new agreements with them. There's a whole bunch here on them. But yeah, it's a highly volatile sector, and I don't know. I mean, I own IIPR, full disclosure, and I've thought about buying a few more shares, but it's really risky, and we don't know what's going to happen once legalization hits. But it could be good for them because they're already established. And I know there was people saying that they're basically a marijuana bank because they do like the sale leasebacks. And I mean, that we won't get in all that, but I think they're going to be okay. But they have a good management team from what I've read. And it's just a little bit, it's going to be a little bit risky, maybe volatile is the better word. I don't know. I'd have to think about that, but we'll just go with risky. Just say it's going to be risky. If I wouldn't put a substantial portion of your net worth in IIPR. If that was me.
Man. Well said, man. Well, I think this is a pretty good place to wrap it up. But fellas, Harris, Russ, thank you guys so much for for joining me this last hour and 11 minutes. It's always good having you guys on, and always fun being able to do this. And all you guys there in the live chat, thank you for hanging out with us this last hour. It's been a blast as always, and we're going to look forward to doing it again next week, same time, same place. And if you guys are watching the replay, thank you also for hanging out this long and listening to just our nonsense the last hour. But with that, you guys have a fantastic night and a fantastic weekend. Stay out of trouble, please. Okay? For me, for my sake. And if you have not done so already, please hit the like and subscribe button if you want to see more content from yours truly. But anyway, you guys have a fantastic night, and we'll see you in the next one.
No, for sure. Everybody,